Hmm. All right, I'm gonna wait for a minute or so. Then I'm gonna start talking about the market real quick. It's gonna be real quick. All right, guys. So it's gonna be real quick. So here we have the S&P 500 time and date, Arizona time, 4 p.m. This is where futures open. You're seeing gold, silver, S&P 500 active right now. Let's check out how gold open. Notice how this is the daily. Notice how on the daily they have a daily Fibonacci, right? 50 Fibonacci right here. And this is important. The fact that it's closing right underneath it, close to it. Um, Here we have silver. Same daily 50 Fibonacci, close right on it. And we're still bullish because they're above this green cushion. Also, there's a trend right here. And like I said, the rumor of interest rate cuts being possible now or higher, whatever the fuck you want to say it, is going to be spreading around. Let me see if I find any right now. mm, all right. So, so yeah, you have gold and silver still bullish. Gold and silver still bullish. As long as these rate cuts are gonna happen, which they're going to, you're gonna see gold and silver shooting up, especially this last week. If we don't get, we want to get bad data. We want to get bad data where it's not crazy, holy shit, but we want to get bad data where holy shit, we got bad data. Oh, but that because the more normally we want good news to show the economy is strong, but now what investors want, they want bad news, bad data, mid bad data, so the Fed could be pushed to cut interest rates. So the more mid bad data we keep getting, the more it's like, oh shit, that's bad. Okay, well, guess they're gonna have to cut into. That's how investors are thinking right now and shit. Because unless they step in, this labor market bad data keeps happening. The market is gonna be too late for the market for the Fed to step in. So that's why they need to step in, and that's why investors think they're going to do it as we keep getting this bad data. So bad data technically is good for the market. And if you go to the S&P 500, you go to the daily. I told you guys that the S&P 500 1 hour candle was gonna open higher based on how Bitcoin and Ethereum were looking during the weekend. You normally start off like this, slow on Friday, then towards Saturday night onto Sunday, you start seeing more action, especially towards Sunday as the market is about to open. You'll see a lot of action from 12 on. Here's big Ethereum, 1 hour candle. Here's Friday, going on to Saturday, Sunday. So all this, if we would have had getting rejected here and just would have been neutral or started going down, especially like Saturday night, and then Saturday night going on to Sunday morning start breaking down, that would have told me, oh fuck. S&P is gonna open way lower. Stocks are gonna open way lower. Um, And again, that's why I pay attention to Bitcoin and Ethereum during the weekends to see how the S&P 500 is gonna open. So there, it opened higher. I said it's either gonna open in the same area or in between here, I said. And here you go. So now, based on how it opened, Monday, we have some light bullshit data. So most likely, either we're gonna retrace, we're gonna push it up throughout the night, hit some of these peaks right here, and they just start getting stuck in this area right here. This is just pretty much the market opening and releasing all this data that came out during the weekend, all this news, and the banks jumping in and making those, making those putting their positions before the market opens, and that's why you see that big gap, because the banks saw the news, or and they control this, so they step in. That's all it means. But at some point, normally these gaps end up getting complete. By that, if there's a gap, the market will come up and close it. Let me show you what I mean by that. Let me take out my indicator. All right. So right here, the market was about to create all-time high. We had some scary news. I forgot what the fuck it was. As always, the market recovers. Right here, the market was rejecting. We didn't create the all-time high that we were expecting for. So what happened? The government had to step in and say, hey, you guys, we're going to open the government back again. And here comes the weekend. Banks step in. The banks buy all this shit. Markets rally, get happy. Oh, guess what, you guys? Well, we having bad data with the market. Oh, fuck. Well, that's pretty much it. Well, we got Nvidia going on. Well, no, Nvidia wasn't good, you guys. All right, so that's all the shit was right here, or Nvidia was over here on Thursday. But either way, it was a cascade of just bad news. Regardless, this gap right here ended up getting closed. After that, after it gets closed, now you're supposed to wait for that good data. Look how in the daily, the market was respecting this 50 Fibonacci. But if you would have paid attention to my strategy, you would have said, holy shit, we're in a 3 candle box. We're in a downtrend 3 candle box. So that means it's red, green, red. If this completes and we're right about the 50, we're about to fucking crash. Especially because we're on a Thursday. This is our last hope. That way Friday, we get good news today, we stabilize, and then Friday we pick up. But since we broke, it was a no-brainer that Thursday going to Friday morning, we were gonna open, especially after if we had bad data on Friday, you were gonna have this. But then again, the government always steps in at the end and tweets something, says something again to get investors up again. It's all a matter of just tactics of tweeting at what time. If you're gonna notice how Fridays government's always gonna step in, and especially when we're having something bad, they're gonna step in on Friday and, hey, you guys, this week we're gonna work on getting the government opened, and that's what happened here. The market at the end, they normally tweet it at the end. They'll tweet it at around 10, 11 o'clock. You'll hear it, and at the end, the market will just catch you off guard. And then, oh man, I wish I would have gone in. Or so this is how the government works. This is how these hedge funds, these banks, they all work together. Now from here, you're gonna start then hearing now how this could be the bottom, based on how interest rates, possibilities, percentages going up. You're gonna start hearing how this could be the bottom as we get to the end of this year and coming into December. But if this Thursday, this Wednesday, we get fucking bad data again, we could just get back over here again, and you'll see we'll finish the month in a fucking fear. You'll see CNN, NBC, everybody talking about how are we in a recession? Are we going to the worst November of ever? But if we get that unexpected good news, which to me it wouldn't be unexpected because these motherfuckers we'll get good news, and we'll close somewhere in the 6,771. Oh, we'll start breaking above that or whatnot. We'll start breaking above that, and then the market would start saying how going to a new all-time high in December, or Santa rally and all that shit. You're gonna start hearing that. But besides that, you guys, that's about it. That's all I'm gonna say. This is Brian Seacrest signing out, you guys.